Cool. Today we have one of the foremost researchers in the precious metal space from TF Metals. We got Craig here today, so thanks for joining.
Hey, Jake, it's a pleasure to meet you. Pleasure to be on your show. I've been looking forward to it.
So right before we were going live, you were saying some crazy things happening today. We had Jay Powell give his meeting and remarks. So what happened? What are your thoughts on it? I thought that'd be a good place to start today.
Yeah, we might as well. I mean, we're living in such unprecedented times. We learned, I guess now it's coming up on almost 2 years ago, that the Fed had pushed their lies to the limit about how 2009 and 10, 11 were an anomaly and that they were going to go back to normal interest rates and, a normal balance sheet and all that stuff. And that was all garbage. And they finally stretched it as far as they could in late 2018. The market began to crash and all that kind of stuff. And they've been backpedaling ever since. That's why gold and silver have been going higher ever since. But see coming to this extreme. And now the Fed is full bore monetizing anything that the Treasury Department needs them to monetize, right? Treasury issues the debt so that they can, do PPP loans and direct checks to people and fund the government. But there are not enough buyers, from the rest of the world. And so the Fed has to go in there and provide new cash and buy the bonds from the Treasury. Then Treasury takes that money and spends it. And so it is a whole brave new world in that regard. We're finally heading down this helicopter money, where the Fed is just simply creating all the cash that the government needs. And so today, we've been waiting now for, 6 weeks. It's been hinted at this big policy change was going to come. Ooh, some big crazy policy change. And all that Powell announced was that going forward, the Fed was going to be comfortable with inflation overshooting their goal of 2%, meaning they could let it go to 3 or 4% and not have to raise interest rates. Well, they've already told us that they're not going to raise interest rates for the next 2.5 years at a minimum. And so they are setting us up for a very bullish long-term scenario for the precious metals. That's not reflected immediately in price. And that's not unusual. That's kind of how these markets work. But it is definitely a bullish situation long term, and it's I'm sure that's something we'll get into.
Yeah, it's interesting to see. It really is. I mean, the price was down today. It's interesting to see how it is not reflected at all in the price. But let me ask you, so far this year in 2020, we've had these lockdowns that have shut the economy down. We've had an incredible amount of money printing by most central banks all over the world, and especially for us here in America. And so we've seen the debt rising. We've seen people without jobs. We've seen a lot of things happening. How has what has occurred thus far this year shifted, changed, or expanded your views with regards to the gold and silver bull market that was beginning to form and was forming long before this happened? But at the end of 2019, when you were sitting back and you're thinking about, what to expect this year versus flash forward 6 months of craziness, how has your view changed?
Well, I thought we were headed upward this year, regardless of this COVID stuff. I have a practice of really sticking my neck out just for people to, give the trolls some food, I guess, and making an annual kind of forecast in early January. That is, because if you're right, like I've been right the last couple of years, it's like, well, geez, I mean, who couldn't have seen that coming? You're nothing special. But if you're wrong, oh my God, you've got troll food for years. But back in, coming out of 2018, I mentioned this earlier, the Fed had allowed the 10-year note to go to more than 3%, and they'd raised Fed funds up near 1.5 or 2%. And the stock market crashed. Finally, the rubber band broke. And so they reversed course in about November, December of 2018. So I wrote in 2019 that, okay, well, this is it. We're rolling now. And even though price of gold had been in about a 5-year range with not being able to get through 1350, I said, well, this is a year we're going to break out and we're going to go to 1480 to 1520. That's exactly where we went. We finished last year right at 1520. And so in my forecast I wrote back in January, I said, well, that's going to continue because the Fed's going to keep, I mean, again, this was before we knew anything about COVID, but I just could see the Fed was going to have to keep lowering interest rates. And that was going to be the policy now going forward because they got to keep the stock market up. And which, again, we can get into that if you want, but we could see this coming. And so my forecast for this year was maybe $1,800 gold and about $22 silver. And well, now with COVID, we've blasted through that because that's really changed everything. The thing that now has changed, besides all this stuff with the Fed having to print, in the multi-trillion-dollar deficits now that are going to be with us for a while, the thing that has really changed is that we are now moving into a regime, if you will, of stagflation, which is a kind of a stagnant economic growth, but with inflation because of all this money printing that eventually they're going to start sending directly to the American citizens to go out and spend. That is a lot like the 1970s. 1970s was a period of sharply negative inflation-adjusted interest rates. And that's when gold went from $100 to $900 in about 4 years. Now, will we get as sharply negative real interest rates this time? No, but they're going to continue to get more negative. Will we go up 9 times the gold price? Probably not, but it's definitely going to go up. And so the hard part is taking the emotion out of that, Jake. And, you get a day like today that's what Powell announced is fundamentally extremely bullish for the precious metals. But the computers react in a certain way. And, here we are in late August. Most traders are still on vacation until the 1st of September. And so you just get these computers running. They see the dollar tick up and then they dump go. I mean, it can really drive you bats. So it's really important to kind of try to stay focused on the long term. And it's not easy.
Yeah, let's talk about that. So the biggest blessing that I had was I put at the end of by summer 2019 going into 2020 in that 6-month window, I put multi 6 figures into mining stocks and at least double that into physical. So I put a lot. I mean, I did what everyone said not to do. I put most of my eggs in the basket, right? And I was getting pretty excited because we were starting to, get that move. I'm like, oh boy. And then the coronavirus stock market crash happened and I saw my gains go quite towards the negative territory very quickly. Too. I think 50% probably in a very short period of time. And that was, that was a little, it was the best thing that happened to me because it made me really understand firsthand what people such as yourself say about the necessity of having a long-term view and having a real thesis that you stick to, that even if the price goes down, that shouldn't make something half as valuable just because the price goes down. And when that happened to me, it was the best thing that happened to me because it's made all these things now. I'm like, I know where it's going. It's been such a blessing. What do you think some of those things are in addition to having a long-term view that are very important for people to understand? You're one of the foremost experts. You interview so many experts. You have a regular show with one of the most successful investors in the world in the precious metals space, in Mr. Sprott, who's a billionaire. Like, you've learned a lot. What do you see is important for investors to understand so that they don't go insane or they go, oh my gosh, we're going down, and then they sell, and then the next week it's like, what do we need to know?
Well, that kind of gets back to the reason why I put those 1-year forecasts out every January. Because like I said, it's almost like career suicide kind of to do that kind of stuff. But I do that because I want people to, so I can go back on days like this and remind people of the big picture of what's really driving things. Because the day-to-day stuff, the noise is just brutal.
Yeah.
But if you could kind of, given where we are with all of this, if you could just kind of Rumpelstiltskin yourself, and go into hibernation for like a year, you're going to be it's like, here's the other thing I would tell people too, Jake. We all sit there and laugh, marvel, whatever the word is at Tesla, right? Remember, it was like $300 and it went to $1,300.
Yeah.
And everyone, without discussing why that's the case, people go, wow, that's amazing. That's $1,000 per share that it went up. You know how many people have actually made that $1,000 per share? Only the ones that have held it the whole time, right? Because human nature is, you make a certain percentage, you think, wow, this is awesome. Oh, I can't go up any further. And so then you get out, and then waiting for a pullback. The pullback never comes, and then you start chasing, and then you buy it again. It's like, like now maybe you bought Tesla again at 600, and you thought, I can't believe I just paid $600 a share. And then it goes to 720. You think, oh my God, I can't believe I made 20% when I bought it at $600 per share, and you sell it out again. And then it goes to 900 or 1,000, and then you think, wow. So that in a bull market like that, if you recognize, and again, not getting the specifics of whether that's, some kind of crazy speculative thing or, what their business actually is or anything like that. That's just something that went up 4 times. And the only way you're going to realize the 4 times yourself is if you've held on the whole time. That's just that's human nature. So what I try to identify is, what are the underlying trends here that are working in our favor? And that's what got reinforced by Powell today, because they have said they're going to hold interest rates at 0 on the short end for the next 2.5 years. They're also studying something called yield curve control, which the Fed has actually done in the past from 1942 to 1951 as they attempted to inflate away, the massive debts incurred for World War II. So they've done this before too. So eventually they're going to implement that policy again, where they say, okay, we're not going to let the bond market move up or interest rates move up with inflation. So we're going to hold interest rates at 1%, but inflation might go to 3. Well, now if you take inflation off of that nominal rate, you're actually losing 2% a year of your purchasing power, which is the long-term most fundamentally positive thing for gold. So again, putting all that back together, Jake, I'm sorry for the long answer, but this COVID thing and the crisis and the economic crisis and the damage that's been done is long lasting. Okay. We'll manage it, the health impact of it all, but you can't, you lose 21 million jobs just because we put back on 8 or 9 million doesn't mean all of a sudden everything's hunky dory. Okay. I'll give you one more tangent. I saw a thing on my local news. It was just over the weekend, maybe Saturday or Sunday, that said they'd done a local survey where I live, and they found that 5% of local businesses didn't think they could stay open another month. And then on top of that, 23% didn't think they could make it past 90 days operating, at this level. So, this is long-lasting stuff. And so these changes that we've seen, these policies that are being implemented aren't going anywhere. And so that allows me to confidently just kind of look the other way on days like this. It doesn't mean I could still be dead wrong, right? Who knows? You never know what's going to happen. But I feel pretty certain that the strategy that you have, you just kind of hang in there, manage your way through the dips, and then let's see where we are a couple of years from now. I suspect your mining share portfolio is going to be doing pretty well.
Yeah, you hit the nail on the head. I think that's been really studying people like yourself has been important, because once I've understood that better, then the emotional volatility doesn't make me talk me out of things based on a short-term view. So let me ask you, what are the specific metrics that you'll be looking at? Obviously, this isn't going to be anytime soon, but that will make you decide when it's time to start exiting.
Yeah, that's always an interesting question, because I've gotten that question. Your exit strategy I was just talking to a friend of mine yesterday. I was on my way to get this fancy new haircut I got, and I'm talking to him on the phone, and he had actually sold some silver that he'd held since 2011, gone to his local coin shop and sold some a couple of months ago. And I started thinking, I thought, I've never sold a single ounce. Wow. Every ounce I've ever purchased over the last whenever I started, 2009, I still have. And so, okay, so when are you ever going to sell that? Yeah, that's a good question. Not yet.
What about mining? What about mining stocks specifically?
Yeah,
Are you looking at anything particular, or is it going to kind of just be an assessment of, seems like we're coming to, a top of the market? Or are you looking at, like when I interviewed Rick Rule, he said two things. He said one was market capitalization when that exceeds 2%, I believe is what he said. And then his other thing was when or if we ever get positive real interest rates.
Okay. Yeah. And actually, my answer to you was going to be, why don't you make sure the next time you talk to Rick Rule, ask him that. Because I call it the rule. It's something he taught me a couple years ago to watch. And Grant Williams, another guy that has spoken about this for years, and that is the level of ownership of all things precious metal, institutional ownership, global asset allocation is still, if it's over 1%, it's only barely over 1%. For the longest time this year, funds, ETFs that own mining shares like the GDX, we're seeing outflows month over month.
Oh, wow.
Okay, so we are nowhere near some kind of speculative bubble in the mining shares at this point. We're just not. You go back again, the rule. We're 1% now. In 1980, the best is that we have for looking back that far, that we got to 8%.
Whoa, really? Wow, that's nuts. I did not know that.
So and again, Jake, there's really only, how many mining shares are there you can buy?
Nothing.
Right? You can list off the majors in one hand or two.
Right. And
so as cash flows into the sector, there's only so many places it can go. And then you get into this crazy, P expansion and all that kind of stuff. Two other things. Now, the sector is about the only one this year and rising dividends. Where else? Everybody else is just getting pummeled, right? And then do not underestimate. We got a bang a week ago Monday when, after it was announced the previous Friday that Buffett had bought some Barrick. And all he did was buy some Barrick. Okay, yeah, big. A lot of people say, big deal, no big. No, it's a really big deal because of the weight that he carries in the kind of traditional investment community. It's like on my site, we talk about how the prices have been managed and manipulated for the precious metals really since 1975 when the futures market started. And you kind of, after a while, you start to think everybody, whoa, this is so obvious. Everybody understands this. It's like, there's people on my site and maybe a handful of other people that understand and know this. Everybody else thinks, oh yeah, gold's just what you see on the screen that's quoted on Bloomberg. A lot of people don't understand, Buffett bought some Barrick, big deal. No, Buffett, for that massive amount of money, we're talking trillions of dollars, really, institutionally managed, pension funds, hedge funds, insurance companies, everything, high net worth people. He's like a bell cow, right? And they sit back and go, oh, whoa, wait a second. Buffett's buying a gold miner? Maybe we should buy some of those. Okay, so that's a really big moment in moving that global asset allocation needle a little bit. And it's just getting started. One more thing on the shares, because I'm sure they're getting the snot kicked out of them again today. They run a pretty regular cycle in a bull market. And I've had to learn this this is years of getting my brains beat in. A gold mining company, typically in a bull market, the only time they have good news is when they report earnings. Okay. The rest of the time, what the hell else are they going to talk about? They might have a drill result, but that, what are they going to do? The tech companies and stuff are always putting out, new things, and that, and they always have all these, all this momentum. But gold, you get one shot a quarter where they tell you how great things are going. And then after that, it's probably going to be bad news. They might be acquiring, some exploration company and diluting their stock, that kind of stuff. And so the prices tend to run in a cycle where prices peak at around earnings season, which for the miners is typically, we just came out of one. It's about the 1st of August. So it had been back at the 1st of May. The next earnings season, the earnings reports come around on the 1st of November. So you get this peak of excitement and interest in speculative buying and stuff around the time all those earnings reports come out, And then they kind of go into, quiet mode again. And you get about 4 or 5 weeks of people saying, well, I guess this is dead money for a while. Let's move back to Tesla.
Right.
Then you get about an 8-week run up again to the next set of earnings reports. And so we're in that right now, that kind of downward trough part where people don't really care. But we're going to be heading upward again beginning in September. The average price of gold for the major producers that they base earnings off of in the second quarter was about $17.20.
Okay.
Well, so far in the third quarter, we've averaged probably $19.20.
Right.
So all the earnings and everything's going to be another 10% higher, at least. Probably more than that because of the leverage that they have.
Yeah.
So boy, this is a long answer. How did I get all the way?
It's super
over
important.
Here and I end up all the way over here.
No, it's super important.
But I'm talking about just kind of some general discipline about when you ask about selling your mining shares. Well, if you want to sell some, you've missed it now. But maybe in November, hedge a little or take some off the table again early November and then look to buy them again sometime before Christmas. That cycle probably you can work that to your advantage if you want to be aggressive.
Yeah, I just think that's important because there's a lot of people. I even saw some comments. Someone said a comment that they bought First Majestic, then it went down, and now they're all mad. And that's why I want to interview people such as yourself, because it's such a misunderstood industry and it does move different than Microsoft does.
Right.
And it's important to understand that, because if you don't, then you think something's wrong when it doesn't go up 0.5% every day. And so it's important. But let me ask you about Buffett a little bit more. Do you think that's the most important thing out of him buying, is that the big money institutions and hedge funds that are just, they do whatever anybody else big does, and now they're like, shoot, I should do it, and they have an extra whatever billions of dollars sitting around? Do you think the institution money is the most important component of that news?
Of getting, absolutely.
Yeah.
And again, because on any given day, right, a stock, any company, it's going to go up or go down based on whether there's more buyers or sellers, right? The float doesn't change on a day-to-day basis. And so you've got to have more buyers and sellers. And that's the same is true for a mining company. And so we've got to have more demand for these shares. It's been dead money. And these mining companies get a real bad reputation, for burning cash and mismanagement, and all kinds of stuff. And so that's why we still don't have a major global asset allocation that, we're getting more money into gold and silver, sure. Yeah, maybe the GLD buying more and more gold and silver. But in terms of, total belief in the sector, we're nowhere near where this could get to. But Buffett buying something is certainly, over time. This isn't something where all of a sudden everybody, the floodgates open.
Right.
But over time, and if price keeps rising, like I think it's going to keep rising, it's never straight up. Right. You go forward and back, climbing the whole time. If I'm right about that, then eventually more and more institutional money is going to get. And then that'll be the point when, you look around and like Kramer on CNBC is having a mining stock exploration company special report or something.
Right.
That'll be the time you go, ooh. Yeah, we're not there yet.
Yeah, that's funny. So let me ask you, kind of, I know you got to head out here soon. One of the things that, you've interviewed so many very, very, very successful investors, and you have a close working relationship with Eric Sprott. What's the number one things that you've learned specifically from a billionaire investor like Eric? What have you learned from him?
Well, two things. We've covered one, and that's trying to take out the noise. Eric gets mad like I do. And we've talked, I've known him now for years. And so we kind of it's amazing. He's just the nicest, most regular guy. And here he is, this multi-billionaire, and I'm just this dope out here in the middle of nowhere. And we talk, so anyway, I learned a number of things from him, but then others, obviously, as well. And the first one is to try to ignore the noise. Okay. Really successful investors don't sit there and slam their keyboard every time, price gets smashed for $10 on the COMEX, right? They recognize the long-term trend and try to position themselves wisely. But the other thing that comes to mind, Jake, and because again, this is so counterintuitive, that Eric mentioned once. Now this is, I don't know, a year or two ago. We take questions on that weekly wrap-up show that we do for Sprott Money. And somebody asked about his investment discipline and how he managed it. And what he said, I thought was, eye-opening. Because, what we're taught is to diversify, right? And especially in the mining companies, you buy a whole bunch of them in the hope that, one of them is a 10 bagger and it makes up for all, the handful that go to zero and the other ones that don't do anything and all that kind of stuff. And that's fine. And I think for most people, that's right. And that's what everybody's always thought and has been taught. What Eric said is what he does, and this is like what you do or what you're supposed to do when you catch a hot table in Vegas. He goes, if I do my homework, I buy a bunch of stuff, but when I find one then that's working, I press my bet. Now, again, that's counterintuitive. That's why most people lose money trading options. Because, and again, we talked about this when we were talking about Tesla earlier. The human nature is to go, yippee, I made 50% in 2 days. I'm out. And so, or they think, well, I know I've lost 50% in 2 days, but maybe it'll come back. And so what a lot of folks do is the exact opposite of what you have to do if you're going to make money consistently, especially, like I said, in trading options. They cut their profit short and they let their losses run. When it needs to be the other way around, you got to cut your losses short and let your profits run. See, and that's really hard thing for, that takes a lot of discipline and a lot of, you got to really have some conviction in your long-term thing. Well, anyway, so what Eric does, anyway, again, another long answer. I guess I've had too much coffee, is then he doubles down and then doubles down again if he knows it's working. And that's how, well, besides all the other stuff that he does with his, from being who he is, but that's how you really blast off. If you find yourself a mining share, that's trading at 2 and it goes to 3 and you say, wow, that's 50%. I better get out. Or you go, yeah, this company's pretty sound and it's definitely working. So I'm going to buy more at 3. And then you buy some more at 6. And then it goes to 18 as, everything really gets crazy in the next couple of years. That's a little better than selling at 3. And so, again, that's a difficult thing to do, and it's not for everybody. But even on the scale of you and I, Jake, that can be put into practice. If you do your homework and you recognize what the overall trend is, and if you can find a specific one like that, a specific company, that could be profitable, to say the least, if you can stick to that kind of strategy. So anyway, that would be one thing that somebody like Eric taught me that I hadn't really considered before, was the idea, again, that counterintuitive idea of pressing your bets rather than locking in profits sometimes.
That's very interesting, and I never really hear anybody say that. But it's interesting that probably the richest guy in the whole mining industry says that. So that's interesting.
That's how you get to be the richest guy in the whole mining industry. Well, and he does private placements and gets warrants, and all that kind of jazz. That's that you and I don't have the ability to do, but you and I do have the ability though to if there's some stock that maybe Eric mentions or something you read about on a message board and you do your homework and you go, damn, at $2,000 gold, that, maybe makes it worth $2. But if we're right and gold in a couple of years goes to 3,000, hell, why wouldn't that be 12?
Right. So let me ask you, you got to head out here in a couple minutes. Where do you see gold going by the end of the year? If you're sitting on your couch and you're like, maybe it could get to here. When you're really thinking about it, where do you think that it has a possibility to go by year's end?
Well, we have a pretty interesting month ahead, today notwithstanding, because everybody's going to get back to work September 1st, or at least after Labor Day here in the U.S. And then you got this next FOMC meeting that's coming up 2 weeks from Wednesday. Okay. And that's when you're going to see Powell again. A lot of folks have said, why why is he announcing, this policy change today? And then everybody thought they were going to wait for the September FOMC. Well, yeah, why did he do that today? Well, then what more are we going to get at the September FOMC? So we've got I think September and October are going to be really interesting. Not necessarily straight, directionally. Oh, it's definitely going up. But there's going to be a lot of interesting stuff happens. And then we got the election coming up and everything else. So you put all that back together. I can't imagine we at least don't make another run back up to the highs that we saw earlier this month. At some point later, kind of like last year. Remember last year we went to 1520 or 1480 or something like that in early September, late August, and then spent about 90 days kind of going sideways and banging back down to 1400 and 1440, and then finished the year strong, back to 1520. That sounds about right. We may continue to, if we don't get any big policy announcements or any change, we may continue just to kind of bumble along here I was hoping that we'd go up in September. We may just kind of keep bumbling along, but then make a run still later this year. And then, if I'm right about all this, we finish the year strong, just like we finished last year strong, with gold up, above 2,000 somewhere, silver, 30 or something like that. And then, oh boy, we'll see what happens next year, So I would imagine that's where we'll be.
Okay, quick.
Sure.
We have 60 seconds. Quick true false question. True false. We will see universal basic income being sent out to everybody when people are going back to work, businesses continue to close, et cetera, et cetera.
Yes, true. I just wrote about this morning. Powell, in his speech, said, traditional, conventional things that, we do to try to spark inflation haven't worked. And they haven't worked in Japan either. Okay. So that means you're probably going to have to consider some non-traditional, unconventional things. So what would that be? That would be
a better way to spark inflation than to give everybody free money to go spend.
Helicopter money. Yeah.
So next, if gold finishes above 2,000, which I'd be willing to bet a lot that it does by the end of this year, it can eclipse 3,000 in 2021.
Yeah. Because, it almost took hold back in early August. We went from 2,000 to 2080, 2,100 in a couple of days.
Yeah, right.
People kind of got used to it. Oh, crap. Oh, wow. We're not going back.
Yeah.
We start once we make another new high, especially you put it on the chart, at the end of a quarter. And then that's what happened in at the end of June. We put on the highest quarterly price we ever had for end of the quarter, and then gold just exploded in July. And then in July, we put on the highest monthly close we ever had and took off the first week of August. So we may sit here and get kind of bored with it, kind of bouncing along sideways like we have for the last 3 weeks. But once it moves up again, gets above 2,000 again, and then starts moving above that high from early August, 3 weeks ago. God. It's only 3 weeks ago, for God's sake. That's when, those doors start to open. Everybody's starting to look for gold in all its forms. We're already seeing shortages, tightness in the wholesale market. That's just going to create more and more pressure on the banks that have to deliver physical metal. All these things are probably going to really start to ramp up next year. Again, the hard part is just to keep on the long term. To keep yourself focused, because if you start trying to time it, you start thinking, well, then you end up chasing, so for that part of your money that's in precious metals or the mining shares, the most important message is just to kind of recognize the long term. And then if you have to, look the other way, and hibernate and just see what happens.
And beautiful. I know you got to go. We're 2 minutes past your time.
It's a busy day. Yeah.
Thank you for your time, Craig.
Hey, Jake, it's a pleasure. I love what you've done. I think your story is great. And anytime I can ever help out, just let me know.